Hey guys, Mike here. So huge week ahead and some big news from the Fed. I mean, it's a game changer, to be honest with you, when it comes to CPI. And just to show you how they work the numbers, I'm fixing to show you that because this is something we got to pay really, really close attention to. I think this is what the bond market and everybody else has been sniffing out. And so we're going to get into that, so pay close attention to that. And I'm going to update earnings for this week. I have the most updated data, so thank a couple people in the comments. They corrected me on that, and I'm going to get to that at the end of the video. But pay close attention to this right here. This is what we got to talk about, guys. So here it is, guys. Starting with January 2023 data, the BLS plans to update weights annually for the Consumer Price Index based on, here it is, a single calendar year, which will be 2021. This is huge because what have they been doing so far? Using 2019 and 2020, using 2 years combined economic data, right? And we'll see this effect take place, and we'll see how this is going to affect CPI on February 10th, 2023. That's when they're going to start using it. And so the big question is, why are they doing this? And one of you guys sent this to me, and I appreciate it. And this is the new methodology versus the old methodology, 1 year versus 2 years. As you can see, the red's right there. It's much higher, right? And so it looks like it's like 8.5 or something like that. You look at the blue, the old methodology is around, what, 7.5? And so you're actually coming from a higher point. And so what's this going to allow them to do? Without doing anything else, CPI should start to look like it falls even further each month now, especially starting in March probably, because you're starting at a higher point now, which the truth, if you look at it, is this more accurate data? Sure, right? And so it's good that they're updating it, but what it's going to allow them to do is, and this is what I think the market sniffed out, no more rate hikes. And if anything, they might do a couple more, but it's going to allow them to say, look, all the rate hikes we did, it's doing great for us. When it has nothing to do with what they did, it has the fact they changed the calculation. And so now they're comparing it to a higher point on CPI. So as it drops, you compare it to the older point, you get a small move. With this one, you should get much bigger moves down. And people go, oh my goodness. And so this data alone will allow them to pause much faster, right? Much faster. And I think this is what you see the bond market sniffing out. Everybody seems to be sniffing this out. And so if that's the case, if that's what we're going to see in these reports, and again, we'll have to wait to see if you see a big difference, but you should, because that plainly sees, if you look at CPI from 2019 to 2020, it was nothing, right? It was 2021 where it started rocketing higher. And so comparing it to a higher point will allow them, without doing anything else, to make it like, man, CPI just fell off a cliff, right? And so that's one big reason they're doing this. And two is, what else is happening lately, especially since China opened up? What are you seeing happen to commodities, right? And I think this is one thing they see happening. Look at copper. Copper's going up, right, since 2023 started. Look over here at iron ore. Iron ore has been going up since almost November, right? Look what's going on with steel. Been going up since December. Look at lumber. I don't know what happened to lumber here on the 17th. It just spiked like crazy. It went from 340 to almost 440 or something like that. Somebody let me know in the comments if you're in that business and what happened there. Look at platinum. To the moon since September. Still going up. Look at soybeans. Going up since November. Big one to watch here. Oil. Look at oil. Just broke out of this falling wedge right here. Some people call that a double bottom to the left right there. I don't really see it. But either way, just broke out of this. And so this could break out and start going higher as well. And if you look, the one thing you got to pay attention to so far, what I see here and all the data I've looked at is diesel fuel continues to drop, even though it seems to be kind of leveling out a little bit. But this is what you got to watch, because if diesel fuel goes up, that means all the exports, imports, everything takes diesel, right? Trains, planes, automobiles. And so if that happens, then that's a whole different ballgame when it comes to inflation. That's one thing that skyrocketed it before. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And not to mention, what do you see going on with silver, right? You need silver for EV batteries and all kinds of stuff. Silver is used in so much stuff, it's insane. Silver has been going up, right? And so all these different inputs that were coming down have been going up. Well, now with this new calculation, I don't think you're really going to even see that. I think it's going to be a blip on the radar now because of what they're comparing it to. Right? Because remember, inflation is nothing but the increase of prices, not the price itself. And so, this right here could be huge in the market. I mean, everybody's expecting crypto to fall, these risk assets to fall, and they're just going on this huge bear market rally. Still could be the case because we still haven't broke out of the descending channel we're talking about. We're going to get into that in just a minute. But this right here is big when it comes to inflation, because this is going to take the inflation news in a way more positive direction. It was already going, oh, look, we peaked. Look how much it's coming down. And now all of a sudden you change the calculation in the middle of the game and say, hey, here we go. Right? And I'm not saying they're wrong for doing it, because they're going to be using more accurate data. But again, what it does is going to give them, whatever you want to call it, cover, whatever you want to call it, to say, hey, we don't have to raise data anymore. We don't have to raise interest rates anymore. Look what happened. Right? And again, look at the charts. I'll probably put them in the video for you tomorrow for those who don't believe this. But when they do pause, the markets go up. I'll try to go over like the last 8 times I've done it or something for you to show you. I'll show you the members. I did a members video on this, showing them when they pause, not cut, when they pause, the markets go up, right? And kind of substantially sometimes. And so, that's something of what you're seeing here. But that is a big, big deal. I think that's a huge game changer. I think it's going to be a game changer in sentiment, right? Because people will say, oh, because most people aren't even going to know about it. They're going to say, God, did you see how much inflation really came down or something? Because they're not going to know the calculation changed, right? They don't understand the calculation's been changed for 20 years and why other countries are reporting double digits and ours never got over 9.1, right? When realistically, if you went with the old calculation, it was much, much higher. And we all know that, right? And so this is going to change sentiment most likely. If this takes place, which looking at the data, it should. We'll find out February. I think March really is where you're going to see the biggest drop. But, we'll find out. And plus, maybe one of the smart reporters will ask Jerome Powell about it. That would be nice. I doubt they will. But, getting back to the market, I mean, you see what's happening here. It just came out. Retail investors, what are they doing? Loading up on single stocks. And you can see single stocks at the top and then ETFs at the bottom. They ain't playing around with no ETFs. It is all about those single stocks, right? Especially high beta stocks. And then the other thing, the options that are expiring within 24 hours. Look at this right here. This is the data we have so far for 2023 Q1. Remember, we're sitting in January. Look at the other quarters. We're already above it already. I mean, people are just loading up. And I mean, I saw this happen Friday. That's what drove the market at the end of the day. People were just buying calls like crazy. And this is also what's jacking up the put call ratio and all kinds of other metrics right now. But it is just, man, the people are loading the boat on these, and it can be puts and calls, by the way. And then getting into the chart, you can see plain as day, what are they doing here? Still got us in this wedge right here. So it's going to break, one way or the other. Got us right there at the 200-day. I mean, when I say right there, I mean literally to the penny of the 200-day. If you guys saw my video on Friday there, you can see it right there. And so, obviously, with earnings coming up, this is going to be a big deal. Again, we don't have FOMC till February 1st. But then looking at it another way, and this is where bulls love this, the S&R flip, support, resistance, flip. This goes back to September, right, where it has been support before, resistance, support, and all of a sudden we break above, start retesting it, and we closed above it Friday, okay? So now it is support, right? And you see the RSI looks very bullish. And so, this thing could absolutely move up on if we even have come close to even decent earnings. And another thing to look at on the weekly on the S&P, this is the 8 and 21, right? 8 moving average, 21 moving average. When the 8 flips over, it's bullish. That is the 21 coming over the 8. And of course, we've been selling off since, but look what's happening. Now they're right there, and they've done so many fake outs this year where you thought the 8 was going to cross over 21 and we're going to be done with this. And now they're sitting right there. So this next week should tell us whether or not we're going to get an 8 and 21 cross. And you can see 8 and 21 cross, boom. Down here, 8 and 21 cross, boom, rocket up. Hopefully you're starting to get the message here, 8 and 21 cross, rocket up. So it's very bullish because this is on the weekly, so this is a much bigger time frame, right? And then we got Tesla, right? Here's Tesla sitting here. What happened? You got this trend line, very defined trend line. It broke above it, right? Retested, bounced, and so here we are going, okay, that's a bullish sign. And I'm just playing around with this because I don't know how to do Elliott waves, but TradeView has one of these. And so I'm just sitting there going, here's the projections, what they're giving us with their Elliott waves. And so you're looking like 145, 155, all the way up to 170. And so that's just something I'm playing around with. Let me know if you do Elliott waves and what you got on your Tesla chart as far as what you can see. Because even the experts, I mean, I've seen people that do it all the time that are very good at this. And one bad earnings report negates all of it, right? Or some news comes out or whatever. And so, we'll have to see. I think when it comes to earnings on Tesla, just in my opinion, let me know what you think in the comments, is that I think it's going to be about the delivery numbers that they're projecting forward with these price cuts, right? Because it puts them in a more competitive advantage now they didn't have before. And I don't think it's going to be nothing to do with top and bottom line. I could be wrong, but I think that's what it's all about. And understand this bounce in Tesla, this isn't about fundamentals. It isn't about something the company changed or anything. This just has to do with it was oversold, right? Had a put wall at 100. And once it started picking up momentum, again, people love Tesla. They started buying up, and then the options were going crazy. Okay, and so that's just kind of how Tesla is. But we'll see Wednesday, which we're going to get into right now. But on the S&P, real simply is the bulls are in charge right now, right? Especially short term, they're getting what they want in a way, but the market's not really letting it move. The S&P right now is just kind of holding in this holding pattern, this chop box. That's basically what we've been doing. Even on the Qs, you can see that we're just sitting in this chop box for it because it's waiting on earnings. That's what's happening. It's waiting on the FOMC on the 1st to see what happens and everything. And so, the bears, what they want to do is get a lower low put in this week. They want to push it down before lower than the previous low to try to show a trend reversal and get people to start coming back in and pushing this thing down. And I think it's, don't quote me, I think it's 4,016 I read is a number you want to watch on the S&P 500 because that'll take us above that double top. And so if that happens, all of a sudden you got that higher high. And so, the bears might just have to pack in at that point in time. And understand when people say, oh man, we're going into a new bull market and stuff. It's like, look, recession's still on the table. And you can have a market, and I think how they call it is you can have a bull run within the bear market, right? Where it runs up and all of a sudden a recession hits and all bets are off. It just craters, right? And then we go down to test new lows. But that could be months down the line. And so that's what you got to understand. Just because this thing starts going up and people go, it's over, we're safe. I mean, you've seen the economic data. It's not good. Okay, they're literally, companies are telling you, they're not laying off people because they think growth's going to be great. So you got to kind of keep that in mind, keep it in context. And so, but understand there is a lot of momentum behind what is happening right now. And so that takes us into the two things that are going to drive the market this week. Earnings, and then there's a lot of economic data coming out again. I don't really put the economic data as far as shifting the markets. It's really these earnings right here. And if we look at the earnings, you can see Monday, I don't see much is going to change the market, but Tuesday's the big one. Microsoft reports after that, and that can absolutely shift the big mega caps down because they report weak earnings, then, and sell off. That could actually drag it down because it accounts for 6% or something like that just on the NASDAQ by itself, maybe 3 to 4 on the S&P. So look for that one. Texas Instruments, obviously you're looking for semiconductors. Halliburton, I expect them to brag about making a bunch of money. Capital One, that's what you're going to learn about us. To see how much they're putting in reserves for defaults. D.R. Horton down there, that's going to tell us about the housing. And if you look on Wednesday, big one here, the biggest one's going to be Tesla, of course, after close. And that's going to drive either all EV stocks up or down pretty much. I can almost bet money on that. And then there's ADP after that. And I think that's going to tell us a lot about, obviously, what we're doing because they deal with the paychecks. And Thursday, let's see, how many more airline CEOs do we see get to brag? So you got American Airlines, Southwest, and then down there is JetBlue and Alaska Airlines. We'll see if they're still bragging about raising prices on us and holding them high. MasterCard's a big one because they're going to know. I mean, we're running up credit cards like it's 1999. And then, of course, you got Visa. That's going to be a big one as well. So they're going to tell us. Intel. But yeah, I really want to listen for the credit cards, how much they're putting back for defaults, what they see happening right now. And they get to see our income when we apply for the credit cards and debt income ratios and all that. Friday, another CEO from oil companies be bragging about that. American Express. Tell us about us again, running stuff up. Besides that, I don't see anything else is going to change the market. And then economic data is a whole bunch this week. Obviously, you're going to have Monday, nothing going on. Tuesday, PMI, and then the Richmond Manufacturing Index. We'll see if that's gotten any better. Wednesday will affect oil prices, crude oil inventories. Thursday, you'll have three good ones. Core durable goods orders, which is big, durable goods orders, and then unemployment claims. I bet you it's still going to be a hot labor market. Thursday also you get new home sales. And then Friday's the big one. This is core PCE price index, personal income, personal spending, all about us, right? Pending home sales, are we buying the homes or not? Our consumer sentiment, which I bet you is going up since inflation is coming down. It's just a guess. And then inflation expectations, which I bet you has come down as well. And so the biggest thing to take away from this video is the CPI data, the way they calculate it, has been changed. So and it's already been dropping with the old data. So imagine what it's going to look like comparing it to the new data. I think it's going to be way down, which could drive the market much higher. Obviously, earnings is going to be a big one. That's probably front and center. And then, of course, your economic data. I don't know. I think earnings is going to take, to me, way better or much more weight to it than this economic data, because we've seen the economic data. It ain't good, but if you look, consumer sentiment's been improving. Even some other things have been improving slightly, because the truth is, could they get much worse? Not really. So really, if you think about that too, you go, wow, the economic data has been terrible. At some point in time, there is a bottom to it where it starts to get a little better, and they go, oh, look, it's getting a little better, right? And you see, retail's coming off the sidelines. The question is, what's big money going to do? We can't drive this market up by ourselves. Are they going to come in or not? And I think everybody's kind of waiting to see how this new core CPI data calculation is going to affect, and then how everybody's going to respond to it from there. So anyway, hope you got something out of it. Let me in the comments what you think about all that good stuff. I know it was a lot, and I'll end up seeing you guys tomorrow.